Welcome to this rendition of my daily log. We'll do a time check. We can see currently we're 22 degrees, all is well. Just also check Deutsche time, things over there, 20 degrees I think. Yeah, well there we are, sunny. So there we go, and it's what time? 3:34 p.m. So for the close, what are the markets doing? Dare I have a bit of a peek? We're going to lose the. Hang on. I'm going to lose my classical music. I'll have a look at the charts here on that old piece of clunker that nearly got. No. That's a bad angle. No, we don't want to see that. So yeah, that's apparently tickety boo over there. I've checked it out, and I was going to go into chapter and verse about support and resistance, but I think I'll just put a link into a YouTube video where one character explained it very well, along with the basic minimum, I would have thought, of technical analysis that will, were you not to have that knowledge, compared to someone that does, you will benefit 100%. I can guarantee it. Across one particular category is that you'll get a sense, that wow, I know what I'm doing. You can see that W shape, I think, in the background, and on the left-hand side of it, if you kick off left of screen on that laptop, you can see it's sort of a squiggly line going, like that, what may be referred to as the snake in a pipe. Basically, range-bound price movement, hitting an upper limit and a lower limit. And the upper limit's known as resistance and the lower limit's known as support. Now you can see where it peaked there before it dropped off, right? So you can see the radical drop off, to the right there, that's the price going down. And on the y-axis, that's the passage of time. I don't know what time frame chart I'm looking at, possibly 15 minutes, I'm guessing, don't know. But we'll come back to that later, because that is a recurring important dimension. So as it drops off, right, you see where it peaked there before the drop. So the last high, where it was before the drop off, right, that was the former peak of the resistance line, right? So that's as high as the buyers could push it up before the sellers came in and went, nah, we're not touching it, see us later, and sold it off all the way down to that bottom line where it hits the bottom, right? So that then becomes the point of support. Sorry, so that's the support, right? For a long position, for a bought position. So if you're buying this in the hope that it goes up and you want to sell it at a profit, which is fucking worst thing you can do, but I'll get back to short selling later. If you don't know how to do that, just fucking start with short selling, right, and get back to buy low, sell high, right? And if you start your education with short selling, know what that means and how to do it, then you're fucking a lot better with your long positions, because you know the mentality of a seller. Anyway, going on a bit. So as it hits the fucking bottom point, right, doesn't go any lower. So the sellers, right, who've bought it high, they want to sell it low, They're trying to drive the price down. They're going, fucking, oh, I'll take $2. I'll take fucking, fuck, no, 150, fuck, 140, fuck. But before there's no buyers at $1.40, right? There's no one, because these guys that either won or lost, they're out of the market. They've either won or lost. So people with the money in the pockets of in this first fucking tick are the ones that sold it short. They've got the cash now. There's no fucking buyers, so they've closed out their position, right? And they're cashed up now, so they've got the liquidity. And then they look at, and then when it gets to that, at that point you then go, where is the money going? So where is the cash going, right? So that may correspond to a negatively correlated tradable asset. So this thing's going sideways. So it's worth looking at the time frame and going, okay, when the winners got all their money, the short sellers cashed out and won, and fucking nothing really happened, did it? Like price-wise, didn't fucking do fucking big ones, like that's big, right? But it kind of, and we're back to the sideways movement. So it can go up, can go down, can go sideways, can go nowhere, and can go ... But while it's going fucking sideways, you wonder, okay, if I've just made a fuckload of money, what do I put that money in for until buyers in this thing come back? Because this is my preferred fucking asset class, right? And when the buyers come back, is there. So I'm trying to account for, where did the money go? The profiteers from that downfall, what did they do with the money? Did they leave it? Did they move it? Did they, and you go, oh fuck, we can't do that. But you can look at other charts, and in particular, and then do the time series data thing and correlate or otherwise, and then you'll know. Well, when I sell me shit and make a heap of money, I'm not going to fucking put it back in there in the same asset and buy low, because I'll be sitting low for all of that fucking time. We don't know deliberately what that time period is, but that could be any length of time. Could be 5 minutes, could be unlikely 5 minutes. Well, it could be hourly, it could be anything. So we don't know what duration that is. So you don't want to be sitting there with no fucking price action, no volatility, risk weighted of course, but you don't want to be sitting there not getting a return. And then the buyers come back into this thing, it goes up again, and where does it go? On the right hand side to the point where it peaked. That was the previous peak on the left before the arse fell out of the world. That was the last high point before it dropped off the cliff. And where does it go? Up here again. And then what's it do? Fucking doof, 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 trying to go higher, but it's replicating, isn't it? That, I can't zoom in, I'm sorry, but on the left hand side, that same pattern. And then you'd be interested in knowing, well, okay, what's the trading range, right? Because this is where your kind of time horizon for your return on the investment's all that crucial. Like the time, be careful with that word. Let's take a step back and think. Okay, I'm a banker. I make money with other people's money. That's what I do. If I lose money with other people's money, well, does it hurt? Yeah. But unless I go to jail for really fucking up, and that's rare. I'd rather lose other people's money than my money, especially when I'm making more money than the people who are lending me the money. and I'm not really doing a fucking great deal relative to the process by which that fucking money is first acquired. So if you've ever been a plasterer's or a driller's offsider, you'll know fucking exactly what I'm talking about. It takes a long time to make the money to put the fucking bet on, and if that's fucking 5 years and you've missed your fucking shot at life, well, that's too bad. Now, your time horizon, you might be in there for a day or an hour or a fucking minute. You might be there long term, because you know that in fact over time there's some fucking real cash flow injection into the fucking thing that I've invested in, and I'll get a return on fucking stake in some sort of entrepreneurship, some sort of enterprise with a view to profit, right? So then it fucking peaks again up there at the top there. We won't go into that middle section there, but it kind of picks up where it left off, but for that big gap. So the timing, if I've got to borrow the money, right, I can't see, I'm paying interest. So if I'm there, it's like, oh well, you haven't lost any money because it's back where it started at $1.76, $1.40 maybe, I don't know. So yeah, it might have gone down, but the fact is I've got to borrow that money to fund that position, and if I've got a bought position, right, depending on the distance between the fucking uptick, how long I'm holding that unrealised loss, it's not realised until I close out and accept the loss. But I might mitigate, I might sell out there going fuck. Or I might think, oh, that's the start I might buy double in. I might misread that little section of the chart there, thinking it's going to be it's going to spike up and do its other thing, right? And this is why technical analysis is so important. So for me, this thing's range bound there, it's range bound left. That's a bit of a fucking spike. I don't know how long it took. It's pretty sharp relative to the others. Bang, bang, there's a parallel line there at the bottom. And then there's a fucking another spike, not as prominent as the down spike, but it's definitely gone up. And it's returned to where it used to be, and it's, again, range bound. Now, is the range on the right greater than the range on the left? That's not really relevant, in fact. Unless, again, you are a short-term trader, or a day trader, a swing trader that basically is taking a sold position at the top, of the take a sold position at the top, and when it hits the bottom, you go sell, and you profit, and then you reinvest that profit. Because you're liquid, you've got the cash to do it. Yeah. This setup is, well, it's been the view for a decade. Yeah. It's kind of Oh yeah. This will be fun. You can do this one. Alright, Bob. Wow, is it still going? Apparently.